Navitas represents a high-risk, high-reward play in the rapidly growing gallium nitride, GaN, and silicon carbide, SiC, power semiconductor market. Right now, they're facing some near-term revenue challenges, but their strategic pivot toward AI data centers, backed by partnerships with NVIDIA and a strong cash position, could offer big upside potential in the long run. Q2 2025 financial snapshot. Revenue, 14.5 million met guidance, but down 29% year over year. Non-GAAP EPS, 0.05 in line with expectations. Cash position, 160.2 million boosted by a 100M capital raise. Q3 guidance, 10, Jung 4, Fu 4, 0.5 M. A sequential decline as they shift strategies. Recent performance. The details. Revenue. Market conditions. Navitas hit the midpoint of guidance, but the 29% drop came mainly from weakness in China's EV and industrial markets, as customers waited for better economic conditions. Profitability trends. GAAP net loss widened to 49.1 M, 0.25 EPS, mainly due to earn-out liability adjustments. On a non-GAAP basis, operating loss improved from 11.8 M to 10.6 M, showing better operational discipline. SG&A expenses dropped 17%, but they kept R&D spending strong for next-gen tech. Balance sheet strength. They're in good shape financially. 161.2 M cash, almost no debt, and a fresh 100 M raise from a 20 M share offering. That gives them plenty of runway to execute their AI data center plans. Strategic shift. AI data center focus. Navitas is making a big pivot toward AI data centers and energy infrastructure, possibly their biggest move since they created the GaN mobile charger market. NVIDIA partnership. They're working on next-gen 800 volts data center architectures, with management estimating the market could hit 2.6 B by 2030. Tech leadership. 14 core GaN patents, 300 yen total patents, 3x faster switching speeds, 4x higher power density versus silicon. Track record. Over 50 M GaN devices shipped. Design wins with all top 10 smartphone makers. Now, expanding into EVs, data centers, and energy infra. Competitive landscape. Major competitors. Infineon bought GaN systems for 830 M. Wolfspeed, ST Microelectronics. Market outlook. Global GaN semiconductor market set to grow from 22.2 B in 2024 to 40.9 B by 2034, 6.4% CAGR. AI data centers are one of the fastest growing segments. Analyst sentiment. Stock performance. Ratings. Mostly hold across 6 brokerages. Rosenblatt. Buy. Target cut from 10.8. Needham. Buy. Target raised. 3.8. Craig Hallam. Downgraded buy. Hold on Q3 concerns. Technical picture. 52-week range. 1.52. 9.48. Trading below short-term moving averages, but above 200-day MA. High implied volatility. 89.4%. Trading dynamics. Low float means momentum-driven spikes. Recent sessions saw 335% above average volume during big moves. Risks. Mitigations. Risks. Revenue transition risk during pivot. Tariff exposure. 3M inventory reserve hit from China-US tensions. Bigger competitors entering GaN space. No clear timeline to profitability. Mitigations. Strong cash reserves. No debt. High current ratio. Focused R&D investment scenarios. For growth investors, take a small speculative position. 1-2% allocation. If you believe in the AI data center story and NVIDIA partnership, be ready for big volatility. For cautious investors, wait for signs like revenue stabilization, AI-related revenue coming in, or gross margins improving toward 45-50%. For value investors, probably best to avoid for now. Forward sales multiple 15x is high given current headwinds. Upcoming catalysts. Q3 2025. Hitting the 10M Zeng 4. View 4. 0.5M revenue target. Clarity on Q4 and 2026 outlook. AI data center updates. Margin improvement. Progress by late 2026. AI data center revenue becomes meaningful. Long-term gross margin target. 50%. GaN. Success could mean major stock re-rating. Bottom line, Navitas is not for the faint of heart. It's a volatile, speculative play with a big upside if the AI pivot works, but it needs careful monitoring and disciplined position sizing